Hey guys, what's going on? It's Frank here from Altcoin Buzz. So today I'm going to do a deep dive analysis on Binance. Now, fundamentals are just as important as technical analysis if you ask me. But if I do the basic fundamentals and the basic TA, I don't think you'll get as much value as if I really dive down deep into one or the other. So this video, I'm really going to dive down deep into the TA and see what the major support levels are, why we are at potentially a very, very good buying point right now. I'm going to give you a trade setup which I'm personally going to enter if we reach my price target. And I'm also going to give you a price target for an exit, so where you can take a profit. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. Now, we have been covering Binance on our news segment with Matty. He does a great job. We talked about how Binance introduces a $100 million decentralized finance or DeFi fund. There's a lot of other interesting news with the Binance Smart Chain. A lot of reasons to be bullish on Binance in terms of fundamentals. But again, now we're going to go into the TA, all right, guys? So Binance Coin, first of all, if you're looking for which chart to look at, what you want to do is you want to go to Binance on CoinGecko and then go to 24-hour volume, sort it by the highest volume, and you will see that BNB USDT has the highest volume and has 25% of the total volume. So this is the chart that we're looking at, BNB USDT. So we're starting by looking on the weekly chart here, and the major zone I see of support is this blue box. Now, in terms of one major level, I would say is the $24.36 level. Why? Well, first of all, if we bring this line all the way back here, you can see that it's marked several major turning points. First of all, over here in January 2018, we had a high. We had a small resistance here in April 2019. Then, of course, we pushed through it. Then we came down and we found support for a small bounce. But then we broke through it, of course, in August 2019 and saw a pretty big bear market ever since that time. Of course, we attempted to break it here. We did actually have a long wick pushing us up. But the fact of the matter is that we closed below this level. And again, we closed below this level over here. So that's why I think this is the most major level. But it's not a good idea to get too emotionally attached to one specific level. You really want to look at it as a zone and look for opportunities within that zone. And right now, the zone, as I see it, is this blue box. And the top of this box, well, that would be an optimistic place to expect a bounce. That was the exact previous high of this candle on the 10th of February 2020. But obviously, now we have already come below that. So now it's really an interesting buy zone. And I'm going to tell you why and exactly where would be a good buy zone. So first of all, I want to let you guys know that I've spent about 45 minutes looking at this chart, looking on different time frames, different indicators. I personally get a big kick out of it. It's kind of like, think of it as a girlfriend. You know, your girlfriend, she'll have times when she's excited, she's having a good time, and then she will change her mood very quickly. And it's kind of like that with the charts. And you want to get a feeling for, you know, when the mood can change, and if it changes, how drastically it can change. And this is sort of what I've done with a chart today. At least that's what I thought about it when I was looking at it. And this is particularly notable on the daily time frame. So if we go to the daily time frame here, what I want to show you is something very interesting. So first of all, you see this big move that we've had recently. We went from a price of basically $18 over here on the 5th of September, and we had a 85% move all the way to $33.3. All right, let's just call that 18 to 33. Now, the interesting thing is that we've seen this type of action before. Have a look at here. This was back in May 2019. We were at a price of $18.3, basically exactly the same price, and we had a 95% move up to $35, a little bit higher than 33, but generally a very similar type of move. And what happened then? Well, we saw a 20% retracement. And interestingly enough, right now, we also have a it's a little bit more, 23% retracement. Now, there is a difference between these moves, and that difference is this, the length of the move. So the length of this move is 9 bars, which represents 9 days. So this is a very powerful, very quick move up, and it's not surprising that we have a sort of similarly powerful move down. Now over here on this move up, although it was a similar percentage in terms of how far it went up, this lasted 16 days, all right? So this means that this had support on the way up. It was basically a more solid, steady move up where we found support, then we moved up, we traced a little bit, we came up. And I think that is why this retracement was not quite as explosive as this one is. That was about 19%. This is currently 23%. And I think that it's reasonable to assume that this won't go much beyond sort of 25, 27% at the very most before having another move up. And again, if we go back here to see how big the next move up was, well, unfortunately, it wasn't that great. We went from $28, we had a 38% move up to almost $40. But that's still a big enough move to get into a trade. And after I do a bit more analysis, I'll show you exactly what that trade setup might look like. But another thing we can infer from our girlfriend named Binance, that's a sad life, isn't it, if your girlfriend is named Binance, is this previous move up over here. So you see how beautifully we touched this orange line. This orange line represents the 21 EMA, all right? Someone asked me in a previous video how I got this indicator. This is EMA/MA. It's very simple. You go to the indicators here, you type in EMA/MA, and there you have it. It's right there. And it's a great indicator because TradingView only lets you have, I think it's 3 or 4 indicators on the free version. I have the paid version. But if you only want to have a few indicators on the chart, then this lets you have all the EMAs and the MAs that you want, as opposed to most indicators which let you have only EMA or MA. In any case, this 21 EMA, as I said, it held beautifully 1, 2, 3, 4 times. And then the 5th time, of course, we came down to touch the 55 EMA before again finding support on the 21 and then of course breaking both of them, and then that of course led to a bear market. So if that's anything to go by, then right now we are of course approaching this 21 EMA. So there's quite a few reasons for why we might want to buy in this area. And whenever you're entering a trade, you want to find not one but multiple reasons for why to enter that trade. So I'm going to give you multiple reasons for why this blue box over here is a good place to enter a trade. So I'm just going to draw it with an outline here so you can see the general area. So the first reason to enter in this trade, well, first of all, is as I mentioned, we had a similar move up in the past here where we saw a 20% retracement and then we saw another move up, all right, going up to $40. So again, we went from $18 all the way to $35. We retraced to $28 and had another move up. That's number one, that we've had this move before and we've seen a move up from there. Number two is that we are in this support zone, and more specifically, we are approaching this very specific support level, again, as I mentioned, at 24.3. And this is not just a zone on the daily, this is a very important level on the weekly chart. That's number two. Number three is this diagonal support line. This is probably the least important reason to get in, but still it's worthy to note that this diagonal support line represented resistance 1, 2, 3, 4 times, and now we're approaching it again. I wouldn't be surprised if we find support here. Now it's very possible and indeed likely that we will see a wick going down from this line, and again, that's why this box is actually slightly below it. Because as you see, we had several wicks pushing up through it before. I wouldn't be surprised if that happens again. But again, this box is not based just on this line. It's based on a number of other indicators. And one of those, of course, is the previous daily high here at 25.83. So that previous daily high often becomes support on the way down. So that's why I have marked the top of the box at this level. So remember, we have several reasons. Number one is that we've seen a similar market structure to this before in the past, from which we had a move up, and a similar type of retracement, again, from which we had a move up. That's number one. Number two, this is probably the biggest reason. Again, this major support zone and the specific level of support here at 24.3. Number three is this diagonal line, which might find support as well. Now, number four is this previous daily high at 25.96. This is more just to give you a specific level to get in. Now, number 5, of course, is the 21 moving average. If we are going to see a big move up here, we would expect the price to bounce from this 21 EMA. And even if it doesn't bounce from here, even if it goes up first, you want to really get in at the best price. And as we've seen in the previous move up, similar to Bitcoin, coming down to the 21 EMA, it will eventually come down there. You don't want to FOMO in until it gets down to this level, really. And it does provide a very good buy entry, or at least it has in the past. Now, of course, we can sometimes break below this. And as you can see over here, we had several closes below the 55 even. And this is just a matter of trading. There's always going to be a luck factor where things just don't work out sometimes. But on the balance of probability, as I said, in this previous move up, we found support here multiple times. And I think it's reasonable to assume that this is a good potential support this time. And I say potential support, it's actually important to define what you mean as support. People often talk, well, this is a good support line. Nothing is defined as support. It's a potential support. You never know for sure anything. So it's good to think of this in terms of potential support. So the 5th reason for why this is a good area to get in is the golden pocket over here. So a common area for retracement is sort of between the 0.5 and the 786 Fibonacci retracement of this move up. So you see we had the move starting over here at $17.9. We take it to the top over here. And right now we are approaching the 0.5. And I wouldn't be surprised if we find support somewhere in here. Now, of course, it's quite possible that we even come down to the 786. But this, I think, would, if it did come down here, it would really have to be a wick pushing us down here and then coming right back up. I don't think this trade would still be validated if we have several daily closes below the sort of $23 level. So those are the 5 reasons for why this is a good zone of support. Now, before I go into the exact trade setup, I just want to show you a couple more things from this chart which I noticed, which I found quite interesting. So first of all, looking at the 3-day chart over here, if we look at the RSI, you can see that we had this scary bearish divergence in the past here where we had lower lows on the RSI. You can see over here we had a high, a lower high, and a lower high. Let's just draw that more accurately, this line. And this represented with price with seeing a high over here, a higher high, and a higher high. So if we see, or if we were to see this type of action, then we might assume that this move might be almost over. But of course, right now we have, okay, admittedly, we have a slightly lower low over here, but you can see the gradient of this line is not nearly as steep as the line before. That's number 1. And number 2 is that these highs over here in the past represented big changes in price. So from this first high to the next one was 48% difference in price, and then we had a 65% difference in price. Whereas if you look at these sort of 3 previous major highs in RSI over here, you can only really see this 40% increase in price. And even that, as I mentioned before, it's not really a clear lower high. You really want to see a very big difference in price as well as a big difference in RSI to qualify sort of a solid bearish divergence. So it's a good sign that we don't have this sort of very clear bearish divergence as we did in the past. And again, that's why I think that's why we have room for another leg up. And again, before I go to the exact setup, I just want to show you how bullish this chart looks in general. So if you go to the weekly time frame over here and we just look at the chart, so you can see like very solid. First of all, we have clear higher highs and higher lows. In fact, I would even like to show you the monthly time frame. This is what I always start out by doing when I look at charts. You can see we have a high. So we started from the low here in 2018, $0.5. It would be nice to get into that level. We had a high, I'm just going to call it $17.4 over here because not take into account this wick. Then we had a low, basically a higher high, higher low. So it wouldn't be unreasonable to expect for this trend to continue and for us to see another move up. And it might be tempting to just draw a sort of general zone in which the price has been. You can see that from the bottom here, we have somewhat of a support line here, not a very clear one, but you might expect the price to sort of continue within this zone and then reach previous highs. I think that based off of this chart, because we've had such a deep retracement, it's hard to justify that we're going to sort of get to $100 or whatever on this next move up, but certainly getting to the previous highs and getting slightly above to the $50, $60 level, I think is quite reasonable for the next several months or the next, 5 5 to 6 months at least. I mean, one interesting thing about Binance to note about this chart is that when it pumps, boy, oh boy, does it pump. And also does it not take that long time, right? So if we go from this low, 3.9 to $39, that pump took all of 6 bars, 6 months, all right? So it's not entirely impossible that over the next 6 months, we see a similar move up. So the other thing which is great about this chart is the volume. You can see that we had solid bullish volume coming up. Then on the bearish volume coming down, it was significantly lower volume, which is what you would like to see, what you would expect to see on a bullish chart. Again, strong bullish volume on the way up. Again, less volume on the way down. And then, of course, we had the Black Friday event over here in March, which led to a lot of volume. I think you can pretty much discount that. But now, of course, we have increasing bullish volume again on the monthly chart. So a good sign that we might be entering another similar move up as we have seen in the past. Okay, so now let's get down to the nitty-gritty. What would be a good setup? So what you want to do is you want to take your long position over here on TradingView, and what I'm actually doing personally is I have a bunch of orders laddered within this area right now. And I'm targeting, first of all, I have a couple targets. One is the previous high. I think it's reasonable to take some profit over there. That would mark a 33% profit target. And the second one, of course, is the previous all-time high of almost $40. So let's start with this conservative or somewhat conservative target of 33% profit. Now, what I look for in a trade is at the very least a 2-to-1, ideally more, of course. But this raises the question, which is one of the trickiest parts of the trade, is where do you stop out? At which point is the trade invalidated? Now, the tricky thing about this is that you often get these scam wicks, well, some people like to call scam wicks. Basically, you can have a level which you think is important, but you often get like a wick which just goes right below that level and then comes right back up. So you want to really have some leeway with your stop loss. So again, as I mentioned before, I think this 786 would be sort of the last real area of support where if we go below that, it's not ideal. So what I like to do is I like to have 2 stop limit levels, especially in crypto where things are so volatile. I think it makes sense to do that where, if you do have this wick going below your level and coming right back up, then at least some portion of your position won't get stopped out. So my plan is to have a stop loss just below 21, so probably like 20.9 or something, and then another stop loss either at the 19.5 level, or really ideally what you would want to do is have the stop loss below the previous low. But this is where you start getting into sort of really not that great risk to reward on your trade, especially with this conservative target. So really I'm going to stop out most of my trade here. I'm not sure exactly which levels I would stop out over here. But also the other thing, guys, is that it's not enough to, I don't recommend that you take this trade without having any knowledge of technical analysis. Because, as things change, I may get out of the trade. I may sort of make decisions based on the price action as it develops. But yeah, as I say, the general idea for me at least is to have this stop loss below the $21 level. And the highest probability scenario I see for this trade to work out is that, we have a bunch of candles in here, and then if there is a wick down, all right, fair enough. But if the wick goes much lower than sort of $21, then yeah, it's just much less likely that we will sort of shoot right back up to this support zone. And of course, the great thing about this trade is that this is the conservative level, this $33.5 level. Really, the next target would be up here at $40 almost. So if you sort of take an average of those 2 targets, then you would have a risk to reward ratio of 2.86, which is pretty solid. So just to conclude, just to clarify, this box where I'm personally entering, again, this is not financial advice. If you're going to enter, please recognize that it's your own risk. I'm not a financial advisor, but I'm personally entering in, actually, to be perfectly honest, I have my orders a little bit lower here, 25.55. I think I was looking at the lower time frames and it just seemed like there was no sort of reason to believe that we would find support exactly there. So I have a between 25.5 and 23. Actually, I have it a little bit lower as well. I looked at my orders just now, 23.5. This is the general box that I'm entering. And of course, one thing to note is that I'm also looking at the 4-hour time frame. So the 4-hour time frame has an important resistance over here. at the $29.2 level. I see two scenarios on the 4-hour time frame. One is that we have a sort of blowout bottom over here where we keep on going lower and then we snap back into a sort of V-shaped reversal, or maybe we come down and then go up like that. That's the first scenario. The other scenario is that we have a bit of a sort of longer move down where we have a move up and then we have another move down, and there we might actually see come down more towards the bottom of this box before making another move up. So those are the two sort of general scenarios that I see. So guys, that's been it for this video. Let me know what you thought of the TA. Let me know if you have a Binance position. I know I've been buying Binance either way. I had a certain percentage of my portfolio which is in a sort of no sell position. I'm going to hold it pretty much indefinitely because I do think it is a promising exchange. Even though it's not fully DeFi, it is trying to enter the DeFi space. And yeah, let me know what you thought of the analysis. If you're going to get in or if you're already trading, just say whatever you want. Let me know down in the comments below. All right, guys, see you in the next one.